Okay, something happened today and it doesn't quite add up. And it's very important to talk about those things. First, oil ripped 7%. Crude closed at $107 a barrel. Second, the 10-year Treasury yield spiked to 4.41. And third, the Fed had its most divided vote in 34 years. And finally, Jerome Powell, in his last press conference as Fed chair, dropped a piece of news that nobody on Wall Street saw it coming. Any one of those news on its own could have moved the market towards a significant pullback. But yet, look what happened. S&P closed at 7,135, down 0.03%. 0.03. The Nasdaq up by a hair. So much uncertainty around macro level, and the market didn't even blip. So you got to ask yourself this question: why? What is going on here? And if you are anywhere curious as I am towards understanding market dynamics to help you trade better, then I promise you this will be an important recap to watch. So stick around while I break this down for you. So it's important to see what the scoreboard for today was, because the first clue is hiding right there. S&P down 0.04%, basically unchanged. Nasdaq up 0.04%, also unchanged. And small caps, the Russell 2000 down over 1%. Now, stop and ask yourself something. If today was a real concern day, would the Nasdaq be the strongest of the index? And the answer is no. If the market was panicking about oil at 107 and yields at 4.4, then would tech be holding up while industrial and small caps were the ones bleeding? No. So here's what actually happened today. The market was holding its breath. That's our first clue, because everyone is waiting for Microsoft, Meta, Google, and Amazon, the four of the largest companies on the planet, to report their earnings today. The price action we saw today just didn't do much, which, to be very honest, this was kind of expected anyways. It basically stayed flat because nobody wanted to commit money in either direction, unless, of course, you have a gambling instinct, but that's the topic for another whole video. So anyway, so it's fascinating that while the markets were holding its breath, three pretty huge things happened that should have had a bigger impact on the markets today, but it didn't. So that tells me once the Mag 4 reports are out, we will get a delayed reaction in the markets heading into tomorrow. So tomorrow could be setting up for a wild day. That is why I always say wait until 9:45 a.m. till 10:15 a.m. Eastern for dust to settle before taking on a trade, and tomorrow will be that much more important. Anyways, going back to what I was saying earlier, those three things were oil, the Fed, and yields. So let me explain to you. Energy was the strongest sector today, and crude oil jumped 7% in one session. That happened mostly on what Trump said in regards to extending the blockade of Iran, which was a direct rejection to Iran's offer to reopen Strait of Hormuz. And if that wasn't enough, UAE withdrawal from OPEC added further pressure on crude oil prices. So while oil was ripping, it opened the gates for inflation, which looks like will be hard to be undone the longer the situation continues the way they are. This is absolutely bad news for growth stocks, the growth stocks that we all love. And if that wasn't enough, today at FOMC, it was announced that the rates will stay steady. That part was expected, so that's not a surprise at all. But what was actually surprising, which is worth talking about, which hasn't happened in 34 years, is that 4 members of the Fed had dissented from a decision. So 3 of those dissenters didn't agree with holding rates. They disagreed with the language. They wanted Powell to remove the easing bias from the statement entirely, meaning they don't think the Fed should be signaling cuts at all anymore. So if you're trying to figure out whether the Fed is going to cut rates this year, The message is on the wall. Like it's the message from today is the path to cuts just got narrower. Not too long ago, we were talking about rate cuts, and look where it has shifted to now. That is why it is important to understand these market dynamics and how they impact the macro picture so you can trade better and smarter. And now for the third thing, and this is the one that actually surprised the market. In his press conference, Powell announced something nobody expected. When his term as chair ends on May 15th, he is staying on as Fed governor indefinitely. Now, if you're new to this, you might be thinking, so what? He's just one of the 7 governors. But here's why it matters. Trump's incoming Fed chair, Kevin Warsh, was supposed to walk into Fed where Trump appointed governors had a clear majority. By Powell saying that majority disappears. Trump appointed governors stay at 3 out of 7. So Powell will basically be a permanent counterweight to whatever Warsh wants to do. So markets read that as less Trump influence over rate cuts going forward, which is why the 10-year yield jumped over Powell's announcement, closed at 4.41%, highest it has been for some time. So 2-year yields jumped even more, up 9 basis points to 3.94, the highest level in almost 2 years. So to put it all together, these reasons should have caused market to pull back significantly, but it didn't. Why? Because what I said earlier, people are waiting on the earnings reports of Mag 7. So which way the market goes entirely depends on those earnings for now. There is no other day on the entire 2026 calendar where this much market cap reports inside a single 24-hour window. About $11 trillion in combined market cap, $11 trillion. That's huge. So everything we just talked about, the oil shock, the Fed dissent, Powell's chess move, none of it matters tomorrow morning. Only the 4 reports tonight matter. And they're going to set the tone for the entire month of May. What's the market going to be looking for? 3 things. They want to see cloud growth, right? Is Google Cloud gaining share, right? Because cloud revenue is the only proof that AI capex is becoming AI revenue. Yesterday's OpenAI panic just put this question on the front page. The other thing is the capex guidance. These 4 are expected to spend over $650 billion, these 4 mega caps, on AI infrastructure this year. $650 billion. If they raise those numbers without showing the cloud revenue to back it up, the AI return debates gets ugly, real ugly. And finally, anything any CEO says about OpenAI, anything and anything will move the stocks. So 2 scenarios for tomorrow. Bull case, in a bullish case, all 4 deliver, cloud growth holds, capex is disciplined, the market gets confirmation that yesterday's panic was overdone, chip stocks rip, we push to new highs into the weekend, which is great. And on the bear side, even one of these 4 shows weakness, even one, then the AI thesis cracks. SMH back to 470, Triple Q tests 640, and the entire month of May becomes a correction story. So how am I playing it? I'm playing it very small. These are just binary events, so position sizing matters more than being right. So if you're new to the market, please don't hold size through this earning cluster. Watch the 4 reports tonight. Watch the after-hour moves. Then trade what you actually see. Thursday morning, that's where a lot of volatility will come. That's a discipline that compounds over a career. So you're waiting and watching the price action. If this helped you make sense of the day, drop a like. It really helps the channel. The next 24 hours are going to define the next 30 days. So I would say trade smart, manage your risk, and I'll see you tomorrow. Bye for now.